Yo, what's good, boys? So this right here is what got me from unprofitable to profitable. It is once I started to understand, once I learned and figured out and identified that market structure combined with liquidity grabs works fucking wonders, right? This is what most gurus, I would say like 90 to 95% of gurus are charging you money for. They are gatekeeping you this information so that you can buy their fucking course. It is so ridiculous. It is so stupid, but that's how this industry works, right? They lure you into, they're gatekeeping pretty much all the information you need, but putting it in their course, right? So you can buy that course so they make money. It's so fucking dumb. But I'm here to change that. I'm here to show you everything you'll ever need to know about market structure combined with liquidity grabs and how you can start making thousands of dollars yourself a day, like me. Like I literally make on average, I would say like at this point, I'm making on average $2,000 per trade or something. And I've been trading for around 4 years now, and I'm here to spare you that time. Obviously, you don't have to go through 4 years of struggling, or 3 years. It took me 3 years to get profitable, but you don't have to go through those 3 years. I'm here to share you everything you will ever need to know about market structure and liquidity grabs. So make sure to watch this video until the end and take some fucking notes, because this is free value here. I'm not trying to sell you anything, and I'm not gonna keep any information in this video. So without further ado, let's get into this. So we are now on a clear chart, and I want to show you guys this, right? I've made a quick presentation here. I'll go over it in a few minutes, so keep watching here. So this basic market structure combined with liquidity grabs, I call it the CCL, okay? Continuation, consolidation, liquidity, and then it repeats itself. Continuation, consolidation, liquidity, and repeats itself over and over again every single day on every single time frame on every single pair, right? It's just basic market structure combined with the liquidity grabs, right? So this red box is the continuation. This is the consolidation. This is the liquidity. Then what comes after liquidity right here will start repeating itself. So it's the continuation once again and vice versa. This is a bearish example. This is a bullish example. You should know that by now, right? Let's delete these arrows and let's go to slide 2. I'll go over these as fast and valuable as possible, right? Step number 1 is to find the continuation, right? Identify the overall direction. The continuation is 90% of the times the overall direction on the 4-hour, daily, or weekly time frame, right? As you can see right here, this is basic market structure with a high, low, higher, high. But funny enough, I also want to address this. Well, funny enough, basic market structure isn't just like this: high, low, higher, low. Wait, let's draw that again: high, low, higher, low, higher, high. If price was this easy to read, everyone and their grandmother would be a millionaire by now, because everyone would be catching these lows, SL right here, TP up here, catching this low right here, TP up here. Like everyone would be catching these moves. But the reality is that price doesn't move like this. This is the theoretical way of market structure, right? And this is why you have to combine it with liquidity grabs, right? This is how market moves. The market moves like this: high, then a retrace, little rejection after this retrace, a little liquidity grab, and then we get that move, right? This is how my price moves. Price is way more advanced and way harder, quote unquote, to read than just this, right? That's just the reality of it. Most gurus are teaching you this right here, where price just pushes out, breaks out, retraces, starts rejecting this retracement, boom, you take a buy, continuation up. But that's not the case. Price needs liquidity formed with market structure in order to move, right? So let's delete this and let's go back to the presentation. So this, and you can see it right here as well. If you were to get into a buy positions right here, SL down here, TP up here, well, what would have happened, right? You would have gotten stopped out right there. Because look, I mean, whenever price is moving sideways, we'll get into this on the next slide. But this, okay, wait, let's keep it to the continuation. Continuation is just whenever price moves up or down in a bullish or bearish trend, right? It's the overall direction, right? Step number 2 is to wait for buy side and sell side liquidity to form. This is what we call the consolidation phase. Whenever price just moved, or whenever price is just pushed up or pushed down, price will most likely start to consolidate, aka range, aka accumulate, right? It's just moving sideways. It doesn't matter what you call it. But whenever price is moving sideways, it is generating buy side and sell side liquidity, right? And wait, let's draw a proper dollar sign. And liquidity equals stop losses, and stop losses equals money, right? The market obviously wants to hunt this money, right? So price isn't just gonna shoot up here like this. Price is gonna grab liquidity and then shoot up, or grab liquidity to the upside and then shoot down. That's how the market moves, right? That's why it isn't that easy to read. But once you understand market structure combined with liquidity, I mean, it's infinite profits at this point. It's just a matter of scaling and compounding, and you can make so much money with it. But whatever, let's delete this as well. So Right here, price is moving sideways, aka consolidating, right? It is generating buy side, sell side liquidity above or below previous highs and lows, right? Above previous highs up here, right? And below previous lows, aka buy side, sell side liquidity, right? And the next step is the liquidity grab, right? The liquidity grab is, funny enough, also following the overall direction, which in this case is bullish. If the direction is bullish, we would ideally see sell side get liquidated first in order to get that big move to continue up post liquidity grab. So this is the continuation post liquidity grab, right? So continuation, consolidation right here, where price is moving sideways, liquidity, and then we get that continuation once again. So once we start putting it all together, let's see here. Well, it's the CCL, CCL, CCL. You get the idea. It just starts repeating itself over and over again. So C, right? Price moving up in a clear bullish direction. The overall direction is bullish. Well, price starts to consolidate right here. Typically happens pre-session, pre-NY, pre-London, pre-Asia. Doesn't matter, right? Just a pre-NY because it's setting itself up for that move to continue in that bullish direction. In this case, when the market opens, right? When the session opens. So generating buy side. Well, that's an ugly dollar sign. Generating sell side liquidity down here. Then what comes after the consolidation phase? The liquidity phase. Grabs liquidity to the downside because the overall trend is bullish. Sell side gets liquidated and vice versa. In a bearish trend, buy side gets liquidated right here to follow the overall direction. And then what happens after the liquidity right here? Well, we see that continuation post liquidity grab, right? So let's show some trading examples of a trade I took today, a little W trade where we can go over basic market structure. Look, if this was what most gurus were teaching you, which is buy the retracement after price starts rejecting, because this is what they're teaching you, right? Low, lower high, lower low, lower high. Just buy this level, sell this level, SL up here, TP down here. But that is not how the market moves, right? So if you were to do that, let's just say you were a retail trader, you were listening to those gurus, well, you would have gotten into sales right here, stop loss up here, SL down here, or somewhere, right? But what happens? Well, you just got liquidated right there, just by a tiny bit. And I know you've tried this before, because in my 3 years of struggling, of becoming profitable, I tried this as well. It happened to me so many times where price would just move to my SL, to my stop loss, and just move in the direction which I was anticipating. Like the bias and direction is right, the execution is just wrong, and the timing is wrong, right? So instead of getting in like an NPC, like a retail trader right here, well, you wait for the liquidity grab and then you take advantage of that continuation post liquidity grab. So if we do the same thing in the slide, this right here is the continuation, bearish continuation, low, lower high, lower low, lower high, lower low, lower high. This right here is now the consolidation where price is moving sideways. Look, price is moving sideways right here. It's not that clean to see in the 15-minute, but I'll get into some more examples here in a bit. Price is moving sideways right here, and what does price do when it's moving sideways? It is generating buy side and sell side liquidity for the market at market open to hunt that liquidity and then move in the overall direction, which in this case is bearish. So continuation, consolidation, and what happens after consolidation? Well, we get that liquidity grab. What happens after the liquidity grab? Well, we get that continuation again, right? So it happens over and over again. This is what most gurus are gatekeeping from you so that you can buy their fucking course. It is ridiculous, right? This is just one example. Let's see the trade we took yesterday as well. Exact same trade. Lovely trade, right? Look at this, right? So we got into some sells right here. SL up here. TP was previous daily lows, aka sell side liquidity down here. And look at this as well. It's the exact same move as today, but just yesterday, right? The overall trend in this case is bearish. Look right there, that's the continuation. This is now the consolidation where price is moving sideways, generating buy side, generating sell side liquidity. What comes after that at market open? Well, we got a liquidity grab right here, liquidating all the early sellers that got into sells right there with these stops up here. I can't really, these stops are crazy, but these stops up here, right there above the previous wicks, and they got liquidated. And what happens after liquidity? Well, we get that continuation post liquidity, right? It is the CCLC, right? CCLC, CCLC, right? It happens over and over and over again every single day. I could go on every single pair, and you could find this, right? Once you do your research, once you understand this, you will see so much fucking reward. It's absolutely crazy. Look at this liquidity grab right there. bullish rejection right there, liquidity, price moving sideways, generating buy side, sell side liquidity, liquidity grab, boom, get that continuation post liquidity. It happens over and over again. Let's go on some pairs, random pairs, gold. Let's see here. Let's delete all drawings. Okay, perfect. So let's just spot on some. Okay, wait, I see one right here. Price is moving up, generating buy side, sell side liquidity. This is the C. This is the another C. L, C, right? Continuation, consolidation, liquidity, continuation. It happens over and over again. And look, it happens on all time frames as well. If we go on the 30, look at this as well. I mean, continuation right here. Then price starts to consolidate pre-session right here, move sideways, generating buy side, sell side liquidity. Then after the C comes the L right here, liquidity. Then after the L, aka liquidity, we get that continuation post liquidity grab. This is literally it. Combine market structure, which is this, with liquidity grabs, and then take advantage of that move post liquidity grab. This is what makes me so much fucking money every single day. I have proof of live account, I have proof of withdrawals, I have proof of bank statements even, and I trade live every single day as well. So I mean, there's nothing to go to. I'm not trying to sell you anything here. I'm trying to show you valuable advice, and I could just say this in hindsight, but once you understand this, and once you learn this, everything will change for you in your trading. Look, that's one right here. Your world previous close bearish, liquidity grab, boom, get that move, right? Look at this, liquidity grab, get that move up, liquidity grab, get that move down, liquidity grab, get that move up. Like, it happens over and over again. I could do this on every single pass. Let's go on NQ as well. Oh wait, why is my, let's go on NQ and show some examples as well, because I mean, on the most volatile pairs, obviously, the more liquidity there is. The more liquidity there is, the more liquidity grabs there is. Look at this as well. Beautiful right here. Look at this, liquidity grab right here. Your entry would be either here, the stops above here, TP down here, and this has got me an 80% win rate. Not 80 actually. Let's go to my 2024. I got an 85% win rate on this. Let's see here. 30 minutes 87, 1 hour 85% win rate using this, right? And in the next year, on 2025, I've deleted the 15 and 5 because I mean, I've got an 70% win rate on that, so that's pretty bad. So I just thought, I mean, I've tried to tweak it, I've tried to identify the problem, but the problem is just it's the lower time frame. So I've just deleted this, and now I have an 30, or I mean 87 and 85% win rate. That's what's the average of that? 86. So 86% win rate, and let's just go down for your sake, right? So let's say 85% win rate using this strategy. 1-to-1, you could get 1-to-2 sometimes, but with an 85% win rate, it's a fucking money glitch, right? It happens over and over again. And look at on NAS as well. Look at this beautiful move. Look at this continuation with lows, lower highs, lower lows, lower highs, lower lows. Then price starts to, you can also just argue for this. Is the continuation. This is the consolidation. This is the liquidity. This is the continuation. It happens over and over and over again. I think you get the idea. But once you understand this, you'll see so much reward here. So lock in, boys. Make this your fucking year, and understand this. Because I mean, I'm not here to try and sell you anything. I'm here to show you real trading results, real trading knowledge, and share everything for free. And this is a beautiful trade we took today. I mean, I just can't get over this. This is just beautiful market structure. Push down, price starts to consolidate, move sideways, liquidity, boom. Over and over again. You get the idea. But I've been yapping for enough time now. I hope you like that video, and yeah, let me know if you want more of these, and I'll make them. So thank you for watching, boys. Leave a like if you liked it, comment, subscribe, whatever, do something. If you don't, then no worries, but I'll catch y'all in the next video.